The advice I would give is to read everything in sight, and to start very young. It's a huge advantage in almost any field to start young. And if that's where your interest lies, and you start young and you read a lot, you're going to do well.
I'm Dudley Schroeder from Council Bluffs, Iowa. When you were younger, what first sparked your interest in investing, and what advice would you give a younger person if they wanted to invest in the stock market? Thank you.
Well, I'm not exactly. I got interested probably when I was maybe 7 or thereabouts. I wasted my time before that. It's a little like W.C. Fields. When he inherited some money, somebody asked him what he did with it, and he said he spent half of it on whiskey and the rest he wasted. So there I was, dawdling around. But I got into, my dad was in the business, so I would go down to his office and I would see these interesting books, and I would read them, and I would go down. He was on the 4th floor of what's now known as the Omaha Building at 17th and Farnham, and on the 2nd floor was Harris Supplement Company, and they had a board, and I would go down there. The market was open on Saturdays in those days, so I could, for 2 hours, so I could go down on Saturday, and I saw all these interesting things going across the tape, and I just read a lot. I probably took every book in the Omaha Public Library, and every book they had on investing, or the stock market, basically. I was very interested in the New York Stock Exchange. I thought maybe I'd want to become a specialist when I grew up, and maybe I still will. But I took all the books out, I read them, and finally when I was 11, I bought 3 shares of stock, and I didn't know. I was fascinated by the subject. My dad got elected to Congress, so now the library became even bigger, and I took all the books I could out of there on markets, and I used to chart and do all that sort of thing. And then finally I read Graham's book when I was at the University of Nebraska, The Intelligent Investor, when I was 19, and that just changed my whole framework. But the advice I would give is to read everything in sight, and to start very young. It's a huge advantage in almost any field to start young. And if that's where your interest lies, and you start young and you read a lot, you're going to do well. I mean, there are no secrets in this business that only the priesthood knows. I mean, we do not go into temples and look at tablets that are only available to those who have passed earlier tests or anything. It's all out there in black and white. It's a simple business. It requires qualities of temperament way more than it requires qualities of intellect. I mean, if you've got more than 125 IQ, you can throw away the rest of the points or give them to your other members of the family or do something, because you don't need it in investing. But you do need a certain temperament that enables you to think for yourself, and then you have to develop a framework, and I developed it from reading Ben Graham. I didn't come up with it myself. Very simple framework. And then you have to look for opportunities that fit within that framework as you go through life, and you can't do something every day. You can learn every day, but you can't act every day. And I talked about reading the annual reports of Anheuser-Busch for 25 years, but I'd read the reports of Coca-Cola and Gillette and all kinds of companies long before we invested in them. And if you enjoy the game, you'll find that like playing bridge or playing baseball or whatever. And if you don't enjoy it, you probably won't do well on it. But I would advise you to start early, read everything in sight, look for the successful framework that's been successful for people. And there's nothing like Graham's, in my view. And you'll have a lot of fun, and you'll probably make a lot of money. Charlie?
Well, I'm at a little disadvantage here. Warren has made himself into kind of a dean of investors, starting as a boy, and he has a greater respect for the process than I do. I have a good bit of Keynes's attitude that money management is sort of a low calling, compared to being a surgeon or a lot of other things.